I thought it would be fun to come in and talk to you about depreciation. So with year end being here, many of you are probably thinking, as you get your taxes back from your tax professional, you need to be entering in your depreciation. Let me know below, do you enter in your depreciation or do you just avoid that altogether? The benefit of entering in your depreciation as you go is that you get to track it within your QuickBooks. I thought I would do a little mini training for you on what depreciation is and how you're going to be entering it in your QuickBooks. Sound good? Awesome. So I've put together some slides. Let's go. First things first, grab a pen and paper. You're probably going to want to take notes. You can always watch this on the replay though, so that'll be great. It'll be here available for you to watch when it works for you. So what is depreciation? In accounting terms, depreciation is defined as the reduction of recorded cost of a fixed asset in a systematic manner. Very boring topics, right? Until the value of the asset becomes zero, meaning you depreciate the value depending on what type of depreciation you're doing. This is all questions for your tax professional. I don't do taxes, so don't ask me specific questions about like how to depreciate your assets. I just want to teach you what it is and then how to do it in QuickBooks. Sound good? So remember, assets are going to be things like buildings, furniture and fixtures, your office equipment, machinery, vehicles, that kind of thing. Land is not something that you will be depreciating, right? Because land always has value, but the buildings you put on it, your vehicles, those kinds of things, they have wear and tear on them. They won't always be worth what you bought. So what basically IRS, which I'll have in a moment here on a slide, is allowing you to basically expense it over time, okay? So let's talk about some of the basic things. Rules about depreciation is basically, it's taking a portion of the cost over as you generate your revenue so that you have like that matching principle that is in accounting, okay? So you're basically taking the value of it over time as you're also generating revenue from whatever that is that you have. So if it's a rental property, you're generating revenue as you're expensing it, so it kind of becomes what we call the matching principle. So you can go through and read this slide a little later if you want, but this is basically just some of the rules to adhere. This is the reason that I recommend that you have a tax professional that helps you through depreciation and you don't try to do it on your own. You can always go to IRS's website. This is the link that you can go to for a publication on understanding how to properly use depreciation. Like I said, I recommend that you have a tax professional. Now, there are 3 components inside of depreciation. If you didn't know, some of this stuff's just kind of interesting to know. Be educated is always a good idea. So one is, what is the useful life, like the period of time that it's going to be useful for? What is the salvage value? What's it going to be worth after you've basically used it? And then the cost of the asset. Those are the 3 things that your tax professional look at. There are different kinds of depreciation. I'm not going to go through all of them today. I've done training on this before inside my simplified community, but there's straight line, declining, a sum of the years, digits. This is all like, there's different ways to do it, but let's keep it simple. If you're talking depreciation on a straight line and you bought an asset that was $100,000 and it's considered the use, like what the value will be, the salvage value is $2,000. So that's 100,000 minus 2,000. That's what you're going to depreciate. And then if you said the useful life of it is 20 years, it would be the 98,000 divided by 20 years. That would give you $4,900 depreciated if it's straight line, right? You can also divide it by 12 if you want. That would give you the monthly depreciation. If you have no salvage value, so that $100,000 asset, and you want to now depreciate it over, say, 5 years instead of 20, it would be $20,000, right? Every year for 5 years equals 100. So you can do it one way or the other. Always talk to your tax professional. There is something called bonus depreciation that you can take, section 179. I don't do taxes, but this is the research I've done for you guys in the past that you can take bonus depreciation. All right, so there are other kinds of depreciation, different kinds. Let's talk about the part that we and I like to teach you, which is how do you enter it in QuickBooks? Does that sound good? Let me know if you're here live. You are going to need to create 2 main accounts. So the first one is accumulated depreciation. What is accumulated depreciation? Like we did all that kind of stuff. Now we're going to talk about like the simplistic terms, which is you depreciate it over time and it accumulates over the years. That's what's called accumulated depreciation. it for your assets. It's a capitalization. So you have the capitalized asset, meaning something that's going to be longer than worth, it's going to last for more than a year. You're capitalizing it, you're making a fixed asset. Then you have your depreciation, what you're expensing on your profit and loss each year. And then you have the accumulated. So how much is it being over the life of that asset have you taken off? And I'll show you how to do it all. Okay, sound good? So you're going to start with adding the asset, and you would already have added a credit. I did a simplified training on this before, so that's what this is about. So how do you do that? You're going to go in and actually add a depreciation account, and you're going to add a depreciation expense. There's two accounts. So you've already added the asset in the past. Now we're just expensing it. So today's training isn't how do you add the asset. The asset should already be added in your QuickBooks file. It's how do you take the depreciation that your tax professional gave you and add that part in. Does it make sense? Let me know. So let me share my QuickBooks screen. Give me one moment and I will share with you the how-tos. Sound good? All right. So what you're going to see is you're going to go, if you're a desktop user, I'll show online in a moment. So you're going to go here under list. You move some here, chart of accounts. That's the first step. Okay. Then you're going to go down to the bottom if you've never set up your depreciation accounts, and you're going to click new. And then you're going to go over here and you're going to click fixed asset. I usually set up my accumulated depreciation first. Okay. So let me go back one step. Remember that your chart of accounts is where all of your accounts sit, and under list, chart of accounts is where we're at. Okay. Now, you should already have your vehicle set up, either each individual vehicle, your building equipment, your land, like whatever your asset is. You'll see that technically, this is a sample file, we've already set up accumulated depreciation, but I'm going to walk you through how to do it. Okay. So if yours looks a little different, you don't have account numbers over here, it does not matter. Don't worry about that. This is just the sample file has this on here. So you're going to go to the bottom, click new. So accumulated depreciation is called a contra account. It reduces the value of, that's the technical term in accounting, but it reduces the value of the asset. Don't worry about the technical, just do what I say and you'll be good to go. So you're going to click fixed asset, click continue, and then you're going to add your title here. So you're going to add accumulated depreciation. So one of the things you want to think about when you're creating this is, do you want it to be a sub-account of the asset? So depending on how you set up your QuickBooks, you could say, I want to know how much I bought in this one vehicle, and then I want the original cost of that vehicle and the depreciation. Or you can lump all your accumulated depreciation together in one account. It's totally up to you. If you want to see it, let me share with you my online version where I'm going to have this example. So this is what it looks like. You can have desktop users or online. You can have your vehicle. You can have the original cost of your vehicle and then the amount that you have depreciated. And as it will become a negative, it will reduce the asset value. Okay. So basically you can choose at what level you want to depreciate your asset over time, and you can write it off as a business expense, even though you still own that asset. That's how it allows you to kind of have the benefit of both. Okay. Does that make sense? So the first thing that you want to decide as you're setting this up is, how do I want my chart of accounts? It always comes back to you as the business owner, as the bookkeeper, to make a decision on how do you want to see this. Do you want it to be a sub account of one of these, or do you want all your accumulated depreciation to be in one account? Totally up to you. Remember, your tax professional, as they're doing your depreciation, will give you a depreciation schedule on a piece of paper. It will say each vehicle that you added or each asset that you have, the year you purchased it, the amount that you originally purchased it for, like the original amount, and then the amount that is for this year's depreciation, and then what it's been the lifetime of that asset. Okay. So when you get that piece of paper, you first need to set these accounts up, and then you actually can enter the transaction, which I'll show you how to do next. So you've gone in, you've added your fixed asset, you're calling it accumulated depreciation, and you can click save and close. Or if I'm going to click cancel because I've already set mine up. It's right here. See, it's already been set up originally. Then what we're going to do is we add the secondary account. Okay. There are two accounts. The first is the accumulated. The second one, that you're going to want to set up is the actual depreciation expense account. Okay, so let's go through and do that now. So you're going to come in here. I'll share the online in a moment. You're going to come in here and you're going to go down to the bottom and you're going to click new. And the depreciation is an expense account. So you're going to choose expense and you're going to click continue. And you're going to come in here and you're going to type depreciation. And if you want, you can write expense on there. If it helps you to know the difference, that's up to you. Typically, we just call it depreciation. Okay. And then you are going to set that account up. Let me see if I already have one actually in this sample file. Hold on. I do. Okay, great. So it's right there. So I just accidentally set this one up. I'll delete it because I haven't actually used it yet, but this is what you would set up. Okay, depreciation expense, or you can call it depreciation, totally up to you. Good? So that's the next step. You've set up now both of your accounts, which means we can do the next step, which is entering in the actual transactions with a journal entry. I rarely recommend journal entries, but we're going to do a journal entry next. Okay, so let me come into my QuickBooks. I'll share my screen with you. All right, before I do that, I am going to, actually, I'll do all of the desktop version and then I'll do all of the online. I'll show the accumulated depreciation, how you set it up over there. That way it's one at a time. Okay, so now we're going to go in and we've set up both accounts, accumulated, and which is a fixed asset, and our expense, depreciation expense. Now we're going to go in and do the journal entry. So you're going to go under company, make general journal entry. You will have your report from your tax professional. Typically, depreciation is done at the end of the year. Okay, so in this example, we're using 2024 dates. So you're going to come in here and you're going to say, from your depreciation that you have from your tax professional, you're going to add in accumulated depreciation. Actually, I like to do depreciation expense first. And the reason is because it's a debit. So I always do my debits first. I like it better. So whatever amount you see as your total depreciation or the depreciation expense, you can do that. It's totally up to you which one you want to do first. So if we said it was just $1,000 in this example, you would put it here. You can come in and you can add a memo. Depreciation for whatever vehicle for the time frame it is. You can always add notes. Then you're going to come in here, and if you only have one accumulated depreciation, it would only be the one. If you have sub depreciations, you would pick them according to what you want them to be, and you add your memo. Then it's as simple as clicking save and close, and boop, it's done. Okay. Now, what happens on our reports? Let's look. So a profit and loss shows which accounts. I'll let you guys think about that for a moment while I type in my dates. I'm going to show you just for the 1 month. I'm going to scroll down. This already had like examples in it. So the profit and loss only is going to show the depreciation expense. So right here is where it's at. This is my 1,000 I entered. There was already one done as an example from before that was 44,000. Okay, but here's our example, the 1,000. Where does the accumulated depreciation show up? Do you know? It's not on the profit and loss because that's only income and expense. It's going to show up on the balance sheet. Okay, so if we go back to December 31st of 24 and we scroll down, we're going to find our accumulated depreciation. Now, as I said, this is an example file, so it has many different transactions in it, not just the one we did, but there's our 1,000. It would be whatever you did, right? Now, something to know is your accumulated depreciation is what? It's accumulating over time. So when you double click on any of so the profit and loss is only going to show what you entered in that year because it's based, or whatever date range you pick. Balance sheet is accumulating, right? So it's everything that's happened to that moment based off the one date that you pick. That's how a balance sheet works. So accumulated is everything that's accumulating. So these are all the different assets, and this much has been depreciated over the years, and this is what's left of the overall asset. That's how it works. Okay? Hopefully that makes sense to you. Let's go in and do the same process for online users. So the first step would be you're going to go into your chart of accounts. To get there, you're going to go under accounting, right? And there'll be your chart of accounts. And then you're going to come over here and you're going to scroll down and you can look to see, like, has it been set up already? That's the first step. If it hasn't, then you can set it up. So here we have the truck. We have depreciation. Now this is technically accumulated depreciation. It's an asset side. And then there's the original cost. So it's already been set up. This one was set up as a subcategory because I wanted to give you two different examples. It's up to you based off you want to see what's the value of a vehicle or not. Okay. So to set this up, you're going to go over here to new, and then you're going to choose what? Fixed asset to set up the accumulated depreciation. And you can call it accumulated. You can call it whatever you want. If you want it to be a main account, then you leave it alone. If you want it to show up as a sub account, you would click here and then you would say, what do you want it to be a sub account of, which asset you've set up? Okay. I've already set up the accumulated depreciation, so I'm going to hit cancel on this one. Then you would come back in. Normally you could just hit save and new, but I didn't want to save it. And you'd come in and now you'd have set up the which account. What is the secondary account that we said we needed to set up? Remember? Depreciation expense and accumulated depreciation. This is actually the journal entry side. Let me go back one. Okay, so accumulated depreciation is what you're going to want to set up. And so, I'm on the wrong screen. I want to be here. Let me share my entire screen. Okay, so then what you're going to set up here is you're going to go here and you're going to go down to which account. If we're setting up so we already set up accumulated, now we're setting up the depreciation expense. It's going to be an expense. In here, it doesn't have depreciation as a list, but you can select it if you like to select the different kinds as other business expense is fine. And then you're going to type in what under the name? Depreciation expense, right? And this doesn't typically need to be a sub-account because we usually only have one depreciation expense. You can choose if you want more than one accumulated depreciation. And then you just click save and close. And that sets up your depreciation expense. I've already set one up in here, so I don't want to set up a separate. You can choose to do it as other or expense. It's totally up to you. Then what you're going to do is you're going to come over here and you're going to set up, you're going to do a journal entry. That's how you do your journal entries. Click on the plus, come over here, and I'll show you how this works. You're going to choose your date range. So if you're doing yours December 31st, you want to make sure it's in the tax year. So if it's currently 2021 for you, and you're entering your depreciation for what time frame? Typically, the prior year should be 2020. Okay, so whenever you're watching this video, you're going to be entering the date based off of when you need to enter it. Then you're going to come over here and you're going to choose your account. So I like depreciation first, just because it's a debit. And if yours is the $1,000, you would do it here. Don't forget to always add your description. And then the credit side is going to be what? Accumulated. Now, I actually called it depreciation on this one too, which is kind of, let me make sure I got the right one. This one, sub-account of truck. So it's truck as the asset and then depreciation, okay? Now, when you're entering these, make sure you always add a memo in and you can choose what you want to do. Now, you may choose that you want to do your depreciation every single month because that's how you want to see on your profit and loss. You would divide it by 12 then and you would enter it every single month. Most people, though, just enter it once a year on the date range that, on the year, on your annual date. Okay, then you click save and you save it. Now, one thing I was going to say is some people say, but the truck is technically an asset. Should I be doing it on a debit? No, because the depreciation is reducing the value of the asset. That's why we make it a credit. Okay, that makes sense. So when you're looking at your reports, you're going to go over to your reports and you're going to pull your profit and loss. And you need to make sure that you're pulling it based off the date that the transaction happens. So I'll just do this one for December. Could have just done, but that's fine. And then you can click refresh and you're going to go down. You're going to see now your depreciation matches what you actually have in your tax return. That's the other reason that we're doing this. And then so the depreciation shows up as an actual expense. And then your balance sheet, sorry, click the wrong button. Balance sheet, you're going to see it in here. So you could choose the date that you want to see it as of. Say, I want to see it as of, let's just look at this last year. Refresh it. You always want to refresh your reports. And then come down and you'll see your depreciation expense here. Okay. Now, if, depending on when, you always want to make sure that your asset is added in. Okay. So you'll go in and you'll see there is your report. It's going to show up as a negative on yours. And if you go in and you relook at your chart of accounts, this is what you're going to see. So when you make it a sub account of one piece of equipment, you can actually see the value of that piece of equipment. If you don't want to do that in your QuickBooks because you have too much equipment or you just don't want that level of detail, remember, you'll always have your report from your tax professional that shows the depreciation as well. So you have your fixed asset. Here is the original cost. You could separate it if you want. This would be what was written off, and then you'll see the difference here. See the difference in math? So that's how depreciation works. Pretty simple to use. Have you been entering yours, and are you going to start entering it now that you realize that it's possible for you to be doing, and that it's actually possibly easier than you originally thought? So that's it for today. I thought it would be fun to create a video for you. Go in, enter in your depreciation. If you liked this video, don't forget to subscribe and get our tips and tricks every single week. I'll make sure I put a link down below and up above that you can join our tips so you get these in your inbox. And if you are looking for more training on how to customize QuickBooks to your specific business, check out confidencewithquickbooks.com, and I look forward to seeing you soon. Thank you for being here. I hope you enjoyed today's tip. Have a great day. See you soon.